Phase 2. Nigeria's tax reforms and emerging crime risks across the crime. This version now flows as Welcome, Context, Crime Risks, Government, Objectives, Public Advisory, and Across the Crime Conclusion. Welcome back to Phase 2. Welcome back to Across the Crime. In our previous publication, we examined Nigeria's new taxation reforms, highlighting the government's objectives: modernizing revenue collection, strengthening governance, expanding the tax base, and ensuring fiscal stability. We explored the structure of the reforms, the intended economic benefits, and public reactions. Today, we move into Phase 2, a deeper, investigative look at how crime intersects with taxation. While tax policy is a legitimate tool for national development, major fiscal reforms often create opportunities for criminal exploitation, abuse of authority, and financial malfeasance, especially when citizens are unaware or enforcement mechanisms are still adjusting. Across Nigeria, taxation now intersects directly with crime. From tax fraud and impersonation to cybercrime, corporate evasion, and corruption, financial systems become vulnerable when transitions are poorly understood or deliberately exploited. This phase of Across the Crime will explore how these risks manifest, how criminals exploit fear and confusion, and how ordinary citizens may become victims. Nigeria's new tax reform and the crime risks. Nigeria's newly implemented tax policy marks a major shift in the country's fiscal and economic framework. While designed to modernize revenue collection and strengthen governance, the reforms have also sparked public debate and concern. Beyond economic implications, there is a growing need to examine the crime risks and security challenges that may arise if the policy is misused or exploited. This report explores the intersection between tax reform and emerging criminal threats, while also explaining the government's rationale for the policy. Emerging crime risks linked to tax reforms. Tax fraud and impersonation. Major tax reforms often trigger a rise in tax-related fraud and impersonation. Criminals may pose as officials of the Nigeria Revenue Service, NRS, government agents, or authorized tax consultants to extort money from individuals and businesses. Fake tax notices, fraudulent payment links, and intimidation tactics tend to increase during policy transitions. Cybercrime and identity theft. As taxation becomes increasingly digital, risks of cybercrime, data breaches, and identity theft also rise. Fraudsters may attempt to steal tax identification numbers, TINs, access personal banking details, or carry out phishing attacks disguised as tax verification or compliance updates. Citizens unaware of official procedures are especially vulnerable. Corporate tax evasion and financial crimes. Some businesses may attempt to evade compliance through underreporting income, falsifying records, or illegally transferring funds. These practices can escalate into serious financial crimes, including money laundering and regulatory violations, ultimately harming the economy and weakening public trust. Corruption and abuse of authority. Without strict oversight, enforcement processes may be abused. Unscrupulous actors may demand bribes in exchange for clearing tax issues, creating opportunities for corruption and exploitation under the guise of reform. Why the federal government introduced the reforms. According to the President and the Economic Council, the tax reforms were introduced to update Nigeria's outdated tax system, reduce reliance on debt financing, and ensure sustainable funding for critical national priorities such as security, infrastructure, healthcare, and education. Key objectives include expanding the tax base to reduce pressure on a limited number of taxpayers, lowering corporate income tax rates to encourage investment and job creation, implementing digital tax systems to reduce leakages, corruption, and inefficiency, exempting essential goods and services from VAT to protect vulnerable citizens. Officials stress that the policy is not punitive, but aimed at fairness, accountability, and long-term economic stability. Public awareness and safety advisory. To protect themselves from tax-related crimes, Nigerians are strongly advised to confirm all tax communications through official government channels. Avoid making tax payments to personal or unofficial accounts. Safeguard personal information, including TINs and banking details. Report suspected tax scams, fraud, or impersonation to authorities. Public awareness is critical for preventing crime, reducing misinformation, and ensuring safe compliance. Across the Crime conclusion. Across the Crime remains dedicated to examining crime not as isolated acts, but as outcomes shaped by policy, governance, and social systems. As Nigeria enters a new phase of taxation reform, vigilance, transparency, and public education are critical to preventing fraud, cybercrime, corruption, and economic exploitation. Awareness is the strongest defense. Informed citizens are harder to exploit, and a society equipped with knowledge is a safer society. Across the Crime, informing the public, exposing risk, and promoting accountability.